Welcome to your daily solo 401k webinar and Q&A session with my solo 401k financial, where we help you to stop overpaying taxes and start building real retirement wealth. Today's topic, S-Corp owners, the 1231 solo 401k cutoff explained. Don't miss your window. This is your chance to get answers, so please use the chat now to ask questions on today's topic or anything else. Please again, chat over your questions now so we can be sure to get to them all. Let's get started. As always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So as always, let's start with the foundation of who's eligible to set up a solo 401k. A solo 401k is for an owner-only business with no non-owner, non-spouse, full-time W-2 employees. So, for example, it can be ideal for consultants, realtors, freelancers, and other small business owners. In order to be eligible, there are really two elements that need to be satisfied. One is you need to be self-employed, and you need to, in order to demonstrate that you satisfy the self-employment requirement, you need to report earned self-employment activity on your taxes. And there's different ways to do that. For example, if your business is taxed as a sole proprietorship, or even as a single member LLC taxed as a sole proprietorship, earned self-employment income would be income reported on Schedule C of your 1040. Whereas if your business is taxed as an S-Corp or a C-Corp, even an LLC taxed as an S-Corp or a C-Corp, earned self-employment income is going to be the W-2 wages that you receive from the S-Corp or the C-Corp. Lastly, if your business is taxed as a partnership, earned self-employment income is income reported on line 14 of the K-1 that you receive from the partnership. The other criteria is that you need to not have any non-owner, non-spouse, full-time W-2 employees. So it needs to be an owner-only business. So you could have contractors, your spouse could be working in the business, you could have another business owner, as long as they're at least a 3% or more business owner who works in the business. The key is that you just not have any non-owner, non-spouse, full-time W-2 employees, where full-time means the individual works as a W-2 employee either 1,000 hours a year with 1 year of service or 500 hours a year for 2 consecutive years. Now, in terms of some of the top eligibility considerations, do I need a separate entity? No. We have many clients, for example, who operate without a formal legal entity, for example, as sole proprietors. The key is that you report earned self-employment income, which we talked about that, right? Schedule C, W-2, line 14 of the K-1. There is no minimum amount of earned self-employment income that you would need in order to be eligible to set up a solo 401k. Your spouse or business partner can participate as long as your spouse or business partner are reporting their own earned self-employment income, such as their own Schedule C or their own W-2 or their own K-1 with line 14 income. It's possible to set up a solo 401k even if you have a W-2 job. For example, if you have a side business or a side hustle, as long as you're reporting that earned self-employment income with no W-2 employees working for you. You could even be participating in your W-2 employer sponsored plan and still have a solo 401k for your side business. Now that we've laid the foundation, let's turn to the 12/31 deadline. Now we're going to tailor this presentation to the question for S corporations. However, the topics do apply to other types of businesses. So if you have a different type of business and you got questions, please don't hesitate to chat it over. So let's start with the critical 2025 deadline. So the critical 2025 deadline is December 31st. So as long as the plan is established by December 31st of 2025, that's going to preserve the ability to make the most types of contributions to the solo 401k for 2025 and have the most time by which those contributions have to be made. So stated differently, as long as you sign up by December 31st, you'll lock in the ability to make all types of solo 401k contributions by the business tax return deadline including extension in 2026. All meaning employee, employer, and mega backdoor Roth, because those are the three types of contributions that can be made to a solo 401k, as long as you have a plan like our plan that allows for all those types of contributions. Now, to tailor it specifically to an S-Corp, we've got a great chart here. So if the individual's business is taxed as an S corporation, could be an LLC taxed as an S corp, or a corporation taxed as an S corp, and they sign up with our plan, they sign up on our website because we establish the plan within the same business day when someone signs up. So if they sign up by the end of the year, December 31st, they're going to preserve the ability to make all types of contributions for 2025 by March 16th or September 15th of next year if they file a timely extension for their S corporation tax return, the 1120S. So that could be pre-tax and or Roth employee contributions, pre-tax and or Roth employer contributions, as well as voluntary after-tax contributions, which is how one makes mega backdoor Roth contributions, because our plan allows for all those types. Now, if they don't set up the plan by the end of the year, but they set it up by March 16th, then they could make employer and or voluntary after-tax contributions for 2025 by March 16th. So they would lose out on the ability to make employee contributions. Or if they file a timely extension for their 1120S for their self-employed business tax return, then they would have until September 15th of 2026, if they file that timely 1120S extension, to make both employer and or voluntary after-tax contributions for 2025. So the downside of waiting until after December 31st to establish the plan is that you'll lose the ability to make employee contributions. Now, there are additional downsides, right? For example, you wouldn't be able to start claiming the tax credit to establish the plan until you file your 2026 tax return if you don't establish the plan until 2026. Also, if you want to take advantage of other features like the ability to take a loan or to invest in alternative investments, then obviously you wouldn't have access to those either until you actually establish the plan. Now, what does it mean to establish the plan? Well, I think we want to start with the concept, which is very illustrative, which helps us understand the key concept here is that a 401k plan is a legal entity. So like any legal entity, it's the documents that create it. Specifically, a 401k is a trust. It's a retirement trust. So again, like any legal entity, it's the documents that create it. So per IRS publication 560, which is the landmark guidance for self-employed retirement plans like a solo 401k, as long as the plan is established by the end of the year, that preserves the ability for the solopreneur, for the self-employed individual, to make all types of contributions by their business tax return deadline, including any timely filed extension. So to establish a legal entity, it all comes down to the documents. So you don't need to open up the accounts. You don't need to make the contributions. The EIN number doesn't need to be obtained for the solo 401k by the end of the year. All that needs to be done to establish the plan is the documents. And what's great about our process is that we make it very easy to establish the plan because we create the documents within the same business day when someone signs up. It's a quick 3-step process. You submit the application on our website that you can find quickly and easily at mysolo401k.net. Just click on open account and then solo 401k. There's just 10 simple questions that we use to gather the information about your business to be able to, step two, draft the solo 401k plan documents. So we prepare those documents the same business day, specifically for your self-employed business, using the IRS approved plan documents that we have to create an IRS approved plan for your business. An email goes out that same business day with a link to our secure document portal where you can download the documents that were pre-drafted, that were drafted for your business. You just simply sign. The cover email specifies where to sign. You've met the deadline. You can take your time to return the documents. Take your time to let us know where you want to open up the accounts. So in that same email, there will be a secure upload link, as well as a link to a next steps questionnaire where you can tell us where you want to open up the accounts for the solo 401k. But again, that can wait until 2026 as long as you sign up by the end of the year. So completing those 3 steps is going to allow you to fund the accounts in 2026 for 2025. It's going to allow you to open up the accounts in 2026 for 2025, and then still have all the flexibility to make all types of contributions, whether employee, employer, or voluntary after tax for 2025, but in 2026. So let's dive deeper into those 3 steps because those are the 3 key steps. So the online application, 10 simple questions. This is how we collect the information about you and your self-employed business so we can draft the solo 401k plan documents. It's going to be self-explanatory, right? Your name, your email, your phone, your address, the name of your business, how your business is taxed, right? Whether it's a sole proprietorship or an LLC taxes an S-Corp or a corporation taxes an S-Corp. The last question we ask is the name of the plan. You want to use 2 words in the word trust. Could be any 2 words, could be a derivative of your business name. So if your business is Smith Consulting LLC, taxes an S-Corp, it could be Smith Consulting Trust, or you could pick something totally different, right? It could be your favorite animal and your favorite color, right? You could get more creative. And then that word trust. So then we take that information. Step 2, we draft the solo 401k plan documents. So those documents are going to include, for example, the adoption agreement. We provide a copy of the favorable determination letter that was issued specifically for those plan documents from the IRS. So that confirms that the plan that's being established is a qualified plan. In order to be able to make contributions to a 401k, it needs to go into a qualified plan. A trust agreement that appoints you as the trustee. Only you have access to the account. We don't have access to the accounts. We're not giving you investment advice. So you are in control. You are the trustee. You're in control by virtue of the fact that you are the trustee. Now, an EIN number will need to be obtained specifically for the solo 401k. That's the IRS expectation. This is an EIN number that's distinct and different from the EIN number that you might already have for your self-employed business. But that EIN number can be obtained next year in 2026. Again, all we're trying to do is establish the plan, and that's the documents. Now, an email will go out linking to our secure document portal where you can download those documents that were drafted specifically for your business based on the information submitted on the application. You can simply sign the documents. You can use electronic signature to sign the documents. Obviously, you could use a wedding signature as well. You can take your time then to return the documents and to submit the next steps questionnaire. In that email, there'll be a link to upload the documents, as well as a link to our next steps questionnaire, which is how clients let us know where they want to open up the accounts. We're neutral as far as where the accounts are opened up at. We've helped customers open up accounts at hundreds of different banks, credit unions, brokerages like Fidelity and Schwab, as well as institutions where customers are working with their advisor. Could be Altruist, could be LPL, could be Fidelity Institutional or Schwab Institutional. And we help open up the accounts at those different institutions, at the institution of choice. For example, preparing the paperwork that the institution might require to open up the accounts. But again, that can occur in 2026. Once you've completed those steps, your plan is effective for 2025, and you've now locked in the ability to make all types of contributions for 2025 by your business tax return deadline, including extension in 2026. For an S-Corp, again, that's going to be March 15th, or excuse me, March 16th, since the 15th falls on a Sunday. So March 16th, the S-Corporation tax return deadline, or September 15th, if you file a timely extension for the 1120S, for the S-Corporation tax return. Now, when you're ready to open up the accounts, it could be in 2025, but again, as long as you sign up, now you've locked in the ability to take your time in 2026. But when you're ready to open up the accounts, you want to return the completed and signed pages of those solo 401k establishment documents using that secure upload link. Then you go to the next steps questionnaire, which is also linked in that initial email. This is just a quick 1-minute questionnaire. It could be submitted by you, it could be submitted by your advisor if you're working with an advisor, where you choose where to open up the accounts. Again, we're neutral. as far as where those accounts are opened up. So once we receive the signed and completed pages back, plus the response to the next steps questionnaire, we prepare the paperwork that's required to open up the requisite accounts. We obtain the EIN number from the IRS that's needed for the plan, and that EIN number will be listed, for example, on the paperwork so that the accounts are opened up under the name and EIN number of the plan. If you're trying to make mega backdoor Roth contributions, you'll be able to indicate that when you're letting us know where you want to open up the accounts. And then we'll prepare the paperwork to open up the requisite number of the accounts. So, for example, if you want to make mega backdoor Roth contributions, you'll need 3 accounts: one for pre tax solo 401k funds, a second for Roth solo 401k funds, and then a third for voluntary after tax solo 401k funds. Now, once the accounts are opened up at the bank or brokerage of choice, now you can fund those accounts. Again, it could be in 2026, all the way up until your tax return deadline, including any timely filed extension, as long as you sign up by December 31st of 2025. So you could fund those accounts with contributions. You could fund those accounts by transferring money from another retirement account, like a pre-existing former employer plan or a non-Roth IRA. We've helped thousands of customers roll over funds from hundreds of different institutions, and we track that experience. We've created that knowledge base because, as you might imagine, all those different institutions will often have their own unique process, maybe a unique form. So we track that experience to make it easy for you so that when you want to roll over money from a specific place, and virtually we've always done it for somebody else in the past, so we can leverage that experience to make it easy for you. Now, let's turn to some of the key questions around the 1231 solo 401k cutoff for solo 401k plans. What do I have to do by December 31st of 2025? Well, the key is just to establish the plan. The plan is a legal entity, so really it comes down to the documents. So those documents need to be established by the end of the year. Sign the documents, you've met the deadline. You can take your time to open up accounts and make contributions then by your self-employed business tax return deadline, including any timely filed extension in 2026. Do I have to open the bank or brokerage account by the end of the year? No, you don't. All you need to do is establish the plan by the end of the year, and that'll preserve the right for you to open up accounts and make contributions by your business tax return deadline, including any timely filed extension next year, if you're trying to make contributions for 2025. Do I have to obtain an employer identification number for the plan by the end of the year? No, you don't. Obtaining the employer identification number is a required step, but that pertains to opening up the accounts because the accounts will need to be opened up under the name and EIN number of the plan. Obtaining the EIN number is not a prerequisite to establish the plan. That's just an EIN number that's going to be associated with the 401k plan. And that meets the IRS expectation that a separate EIN number is obtained. And from a practical purpose, it's also important because to the extent that there is any income that's reported with respect to these accounts, let's say someone opens up a bank account that's an interest-bearing account, the bank is going to issue a 1099 INT to report the interest income earned with respect to that account. And so they're going to issue that 1099 INT under the tax identification number that was used to open the account. So when we obtain that EIN number from the IRS for your solo 401k plan, that's letting the IRS know that this EIN number is associated with your solo 401k plan so that subsequently, when the IRS receives the 1099 INT reporting the interest income earned, and it's issued under the EIN number of the solo 401k, now the IRS will understand that that income was being earned inside of a 401k on a tax deferred basis, and therefore won't look for that income to be reported on your personal tax return or your business tax return like the IRS would if that account had been opened up under your social security number or your business EIN number. Is the tax return deadline my personal tax return deadline, in other words, April 15th, or my self-employed business tax return deadline? It's your self-employed business tax return deadline. So for businesses that are taxed as an S-Corp, that means it's going to be March 16th of 2026, since the 15th falls on a Sunday. That's the S corporation tax return deadline, or September 15th of next year if you file a timely extension for your 1120S for your S corporation tax return. If I adopt a plan in December 2025, how can I make contributions based on income that I earned in January 2026? Well, the industry best practice is for the plan to be effective as of January 1st, even if you adopt the plan in 2025. Therefore, you will be able to make contributions for any self-employment income earned and reported for 2025. My CPA, my tax advisor, they're informing me that the employee contribution must be made by December 31st, 2025. Are you sure that I can make this contribution in 2026? This is a common point of confusion because employee contributions, if this was a full-time employer plan, like one that one might have through a corporate job, if you have a 401k at your corporate job, you as the employee need to make that employee contribution by the end of the year. But the rules are different for solo 401k plans. And it makes sense from a policy perspective. Many self employed individuals don't know how much they've made until after the end of the year. And their ability to make contributions is a function of how much they've made. So, per IRS publication, which is the landmark guidance for self employed retirement plans like a solo 401k, as long as the plan is established by the end of the year, that will preserve the ability to make all types of contributions, including employee contributions, employer contributions, even voluntary after tax contributions by the business tax return deadline, including any timely filed extension in 2026. Can I make a Roth conversion for 2025 anytime up until my tax return deadline in 2026? That's a great question. So, a Roth conversion, let's first define it, is not a contribution. That's where one takes pre-tax money that's already in their solo 401k and moves it to a Roth account, converts it to a Roth account. So now that money's going from a pre-tax status to a post-tax status. That'll be a taxable event, therefore. Subsequently, once the money's in the Roth account, now it has that potential for tax-free growth, but the transfer will be taxable. It's taxable for the year of the transfer. So if the individual wants to move pre-tax money to their Roth account, so now that it can grow with potential tax-free growth, they'll need to pay the taxes on the amount that's converted. And that'll be taxable for the year of the conversion. So if someone wants that amount to be taxable for 2025, they would need to convert it by December 31st of 2025. You also need, of course, need to have a plan like ours that allows for an in-plan pre-tax to Roth conversion. And you want to work with a provider like us who will prepare that 1099-R as an optional free service. So customers would just need to let us know about that pre-tax to Roth conversion since we don't have access to the account, but they can do it easily on our website. We have forms that they can use 24/7 at mysolo401k.net/forms, where they can give us the information we need to prepare that 1099-R to report that taxable pre-tax to Roth conversion. All right, that takes us to the end of the slides we wanted to share. Thank you so much for joining. If you're finding this to be helpful, please like this video. That will tell the platform, the algorithm, that the content is valuable. So please like whether you're on LinkedIn or YouTube or X or Instagram. So ultimately, that's going to help other solopreneurs, other advisors like you find it. So again, please like. If you would like to get notifications of all of our crucial content that we deliver every day to help you secure your retirement, please subscribe because we do go live on a daily basis. Now let's turn to the additional question that was chatted up. So yes, we will need your social security number if you will have us obtain the EIN number for the solo 401k. If you prefer not to give us the social security number, then we can guide you through how to obtain the EIN number via the IRS EIN system, the online system. Does your plan allow for a married couple, each owning a single member? This is coming from Chuck. Thank you for the question, Chuck. So a married couple, each owning a single member LLC, disregarded entities, married filing jointly. It does. Now, if the spouses are working together in the same business, then it would be one plan, one fee, but separate accounts for each spouse. If each spouse has their own separate business, and we're assuming there are no non-owner, non-employees working for any business owned by either spouse, and we're assuming that each spouse is reporting their own earned self-employment income, but each spouse has their own separate business, right? Like let's assume one spouse is maybe an attorney and the other spouse is a realtor. Then the process would be to set up a separate solo 401k plan for each business. A solo 401k plan, like any 401k plan, is for an employer, but a solo 401k plan is for a self-employed business. So if there are really two separate businesses owned by two different spouses, then it would be a separate plan for each business. Yes, I understand the control group rules, but if they're really separate businesses, the expectation is that it's a separate plan for each business. But again, if the spouse, so it depends on the facts and circumstances, right? So, but if the spouses are, say, working together in one business, then that one business can sponsor the solo 401k. And even if one of the spouses has another business that's a self-employed business that's generating earned self-employment income, the spouse can aggregate from all sources of self-employment income to justify contributions to their solo 401k. Okay, great. If there are more questions, don't hesitate to chat it up. We want to take a moment to invite you to our community. We have the largest community. We have over 30,000 solo 401k owners, solopreneurs, other interested parties, right? Advisors, etc., around these solo 401k topics. It's totally free to join. All are welcome. You don't need to be a client to join. With that number of members, we do have vibrant forums. We have a library of videos and webinars. So that means there's a ton of ways to learn and to share the knowledge. Please join at mysolo401k.net/my community. You can join quickly and easily. So please don't hesitate. I have another question from Chuck. Thank you. I have both Schwab brokerage and IRA accounts. Which firm is easier to transfer assets to new accounts? Well, from a transfer process, I would say they're equally easy. Now, what clients will do, first of all, you can only transfer from a former employer plan or a non-Roth IRA to the solo 401k. If the money's coming from a former employer plan, the funds will transfer by check, even if the former employer plan is at Fidelity and the new account for the solo 401k is at Fidelity. If you have a non-Roth IRA, say at Fidelity, then it's going to be much easier to transfer to a new account at Fidelity for the solo 401k because that'll be an internal electronic transfer. So if it's going from an IRA at Fidelity to the new account for the 401k, electronic transfer. If it's coming from a former employer plan, regardless of where it is, check transfer. So if it's a traditional IRA, then yes, you can transfer it to the solo 401k. If it's a Roth IRA, per the Roth IRA rules, you cannot transfer a Roth IRA to any type of 401k, including a solo 401k. Okay, great. We'll give it one more moment. Again, we'll make a plug to please like and subscribe just to help us get the word out to others like you, other solopreneurs. So if the account is at Fidelity, it's going to be easier to transfer to a new account at Fidelity for the solo 401k. If the IRA is at Schwab, it's going to be easier to transfer to an account at Schwab for the solo 401k because it'll be an electronic transfer. If you have an IRA at Schwab, but you open up the new account for the solo 401k at Fidelity, that'll be a check transfer. Hopefully that makes sense. Okay, well, you can open accounts at multiple places, or if you have traditional IRAs at Fidelity and Schwab, between the two, Fidelity is the most popular. Fidelity has an online process to open up accounts. They have more options to make contributions electronically to the accounts that are opened up for a third-party solo 401k. So between the two, Fidelity and Schwab are the most popular, but Schwab is definitely number two. If you have IRAs, traditional IRAs at both Fidelity and Schwab, let's say you choose to open up the accounts at Fidelity, you could tell Fidelity's IRA department to go and retrieve the funds from your IRA at Schwab. Then it'll go electronically via the ACAT system from the Schwab IRA to the Fidelity IRA. Then it could go, everything could then come from the Fidelity IRA to the pre-tax solo 401k account that's set up at Fidelity. That's one option. Okay, great. Well, it looks like that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe so we can keep building this community. We'll be back here tomorrow with more crucial content to help you secure your retirement.